Hello, fellow traders. Tis I, TheRumpledOne, coming to you Monday, April the 18th, Easter Monday. The year's 2022. Let's talk trading. Master of One, Part 6. As always, these videos for educational purposes only. Your results may differ from mine. So, what are we going to talk about? Master of One. I think most of you have probably heard of Elon Musk. And he likes to talk about first principles, distilling things down to the basics. And if you were to distill trading down to its first principles, what would you say trading distills down to? There's going to probably be a lot of you traders who might come up with an answer something like, well, it's exchanging goods or services for money. You could say that's trading. Somebody might say, well, it's buying low and selling high, and that's what trading's trying to do. But if you think about it, it kind of misses the real basic thing that we all as traders trying to do. And that is to determine which way the market's going to go over a period of time. Is it going to go up or is it going to go down? So usually traders try to identify things like the trend. Is the trend up or is it trending down? Problem is the way we look at price, meaning charts, that can deceive us. It could be going up on the 1 minute, but going down on the monthly. So which way is price moving? Well, you see the fact that we look at multiple charts and thinking they're telling us something different. That's also kind of wrong. Because price at any given time, it's either going up or it's going down. Doesn't matter what time frame you're looking at. So that's one of the tricks or myths that we've been taught, and some of us have bought into, and some of us have given it back because we go, that's not really what's happening. It's not paying off. So when we look at a chart, and let's see, I'll bring up the simple price action chart. So when we look at a chart, we try and determine, is it going to go up or is it going to go down? And the answer is probably, yeah, it's going to go up and it's going to go down. But which way is it going to go and how long is it going to go that way? So for example, some of you know I like to consider the 40, between 40 and 50, the launch pad, because usually if it gets to this area, it'll run up to 60. But there's one small caveat to that. And the small caveat is usually it has to come up from below 40. The days open has to be below 40. So let's see. Why do I have the template? I meant to look at the time frame. So if we look at the daily, you can see here it opened below and it rocketed up. But you see, price then came down the next day, stopped, it went through the 40s, and then came back up. And actually, where did it close? It closed at 68. And then here, what happened here? price went down into the 40s, almost below 40, but it closed at 62. So now that brings us to today. And if you look at the chart, you can see here we've got the candle from the 15th, Friday. It went below the that low or out of that wick zone. And we know statistically price doesn't like staying in the wick zone. So in fact, knowing that one little fact, you come back here, price kind of got in the wick zone, and then it came right back out. Because if we look at the daily, what was that low? 40.7. So right here, price was going up. Now it's going down. So, but you can see here, we had a wall line at 30. And what did price do? It hit 30 and then bounced back up. So we just have to sit here and observe price and then determine, is it going to go up or is it going to go down? So we know price has to range, high minus the low. And usually, this time of day, these numbers are in the 20s or higher. But it is a holiday, Easter Monday. So we're not going to see the normal price action. So if it's not going to be the normal price action, why would you trade? Just sit it out, wait for tomorrow. But if we look at what's happened here, we had some of these really huge bars going up and some huge bars coming back down. And I like to call big bars return bars. Well, if you look here, what happened? Price returned. Now you've got this big bar, price hasn't returned. So, the whole idea is mastering one thing, mastering which way price is going to go over a period of time. The thing is, once again, you're going to quote unquote guess correctly sometimes, and sometimes you're not. So we know price has to move away from the open this hour, which is at 1.30359, and it's just dropped from that. And so you can sit and you can watch. And today, might be a good day because since price isn't moving normally, you can sit and observe and see, would my methods work today? Would I have to change something? And so that way, the next time you see price doing something abnormal, you'd either know A, don't trade, or B, here's what I need to adjust. So mastering which way price is going to move over a certain period of time. So, for example, on the buy zone, when I came up with that system for stocks, and then I adapted to FOREX, I look here and I say, chances are if price moves away from the open at least 8 or 10 pips. It's going to go probably 40 or 50 pips in that direction. But today, as you can see, that hasn't happened. The whole range of the day is only 58 pips. But if you notice, price did get into this area, it pulled back and then came back down. Now in this particular case, it got into the area and never went up, but it already had. So what you have to look at is, so if price got to here and pulled back, and then it starts going back the other way, do you wait for it to make a break? Or do you wait for something else to give you an indication what direction to trade? So, following the main rule of thumb, don't trade against H1. So this is saying you want to wait for it to get here. You don't want to trade against this red candle. Here, you don't want to trade against it. Here we came all the way down. And that's a 20 pip run. So after 20 pips in an hour, a lot of times prices, quote unquote, run out of gas in that direction. Because there were some other clues. It broke out of this low, so there was an opportunity to take a trade. It came across the 50 line, psychological 50 line. There was an opportunity. It hit the open. There's another opportunity. So if you wait all the way here and you've given up all those opportunities on trades that are what you could call pretty much basic trades that maybe a beginning trader might learn, and you wait all the way here, well, statistically the odds are against you for this going past 20 on the 30 or maybe 40 pips. But you can see here, when this candle first opened, broke the low into the sell zone, then it moved further down because it broke the previous low, H1 low, broke out of the short zone or sell zone right here. It was telling you what to do. So picking direction. Well, what just happened here? Price went down, came back up. So you can see here, it's pretty much ranging within the previous hour. It failed to break the high, failed to break the low. It's ranging. So you see price coming down, fail to break it, starts going the other way. Which way's price going? Which way are you going to trade? So once again, mastering the one thing, what's the first principle? Is trade direction. Because if you get direction right, you can almost get almost everything else wrong and make money. But if you get direction right and you get everything else right, you really stack the odds in your favor. So, fellow traders, master of one thing, a first principle. Just keep that in mind. And also, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.